Hello everybody, welcome again to our lesson on accounting. Now we are looking at the trial balance. We want to do an income statement and a balance sheet from this trial balance. So we have these figures on the board. We have bank 13,100, stocks 12,100, debtors 1,400, prepayments 3,300, equipment 6,000, accumulated depreciation 100, payables 700, wages owing 600, unearned revenue 1,200, capital 20,000, drawings 500, rent income 600, wages 800, insurance 1,000, cost of sales 800, depreciation expense 100. So this is the information that we have. We need to use this information to prepare an income statement. This is an introduction tutorial, so I'll try to make things very clear and I'll try to make all the explanations. Okay, so now we can take the question from the board. We can pause our video and take the question, then we start. Okay. Now we can look at our trial balance and do the income statement first. So the income statement, we start by writing the correct title. The correct title. An income statement relates to a period of time. So we'll write it in the following manner. Profit and loss for the year ended 31 December 20XX. Okay, so 20XX can be any year, 2021, 2022. This year is XX. So we write it in this manner because it relates to a period of time. It relates to an annual period of time. Okay. Now let's look at our first entry into the profit and loss statement. It's always revenue or sales. So we'll start with sales. We have sales. Our sales figure, it's 5,300. We go to the end and write 5,300. Okay, if we have returns inwards, we deduct returns inwards from the sales and write a figure. If we have returns inwards, we'll put it in this way: returns inwards and deduct it from there. Then the figure that we get is called net sales. Net sales. In this case, we don't have that, so we won't write anything of this nature. So our net sales remains 5,300. Let's just assume that our returns inwards, they were 0. Let's put a 0. So we remain with 5,300 on net sales. Then we move on to the cost of sales component. Cost of sales. In order to obtain gross profit, we deduct cost of sales from sales. Okay, so in cost of sales, what do we have? What do we have in cost of sales? We go and try to look on our income statement. Our income statement, it lists purchases. It lists purchases as 2,000. Actually, we are given the cost of sales figure. So, where do we get purchases from? We do the following calculation. We have our closing stock. We put it there. Stock. Our closing stock is 1,200. Our purchases is unknown. Our cost of sales is 800. So what it means is that if cost of sales is equal to purchases minus closing stock, then what is purchases here? We have cost of sales and closing stock. It means we are just adding these two figures. So our purchases, they were 2,000. That's it. Then we make our calculations. If our cost of sales is 800, we take it straight and deduct it from our net sales. So we go and say net sales of 5,300, we deduct 800. We come up with a gross profit of 4,500. Okay, so this is the first component, the first part of the income statement, the first part of the profit and loss. We are now at gross profit. This is our gross profit. Remember, we said gross profit is equal to sales minus cost of sales. Okay, now that we have gross profit, we have to add any sort of other incomes that may arise which are not accumulating from the main business of our organization. Let's say our organization, we are into buying and selling. We are a retail store. If we accumulate incomes from discounts or from rent incomes, there are other incomes channels coming from other things that we are not mainly focusing on. Those income, we put them below gross profit. We add them to the gross profit to get a figure that we call gross profit and other incomes. So we now look at our statement and try to see if we have such things of such nature. We have rental income. So we put rent income there. Our rent income is 600. So we add that rent income to the gross profit to come up with 5,100. This is gross profit and other incomes. Okay, now we have gross profit and other incomes as 5,100. We can now move to the expenses portion, to the expenses part. So I'll just wrap this and create some space for us. we have $5,100. We now have to deduct expenses from our gross profit and other incomes figure. We look at our trial balance and try to identify all the expenses. Let's identify all the expenses. We have wages, wages 800. We also have insurance, at 300. We also have rent at 1,000. We also have depreciation which is $100. Okay, these are all the expenses that we have. So we have to add the expenses and deduct them from our gross profit and other income figures. So if we add 800 plus 300 plus 1,000 plus 100, we get 2,200. 2,200 is the total of our expenses. Then we come and deduct that from our gross profit and other incomes. We come up with 2,900. This figure resembles our net profit. Okay, so this was the income statement. This was the profit and loss statement for the year ended 31 December 20XX. Okay, so now having this figure, we can now move on and try to do a balance sheet or a statement of financial position. Okay, I'll just wrap this again so that we move to the balance sheet. Now when we do the balance sheet, our headings, they slightly change. They are different from what we write on the profit and loss statement. Now a balance sheet, we write it in the following manner. A balance sheet relates to a period, to a day, to a time, date. So it's not a period like we did on the income statement. An income statement relates to a period. A balance sheet relates to a point in time. So now we are doing our balance sheet as at 31 December 20XX. So this is the balance sheet. That's what we do. That's how we write a balance sheet. Now the first thing that comes in a balance sheet is the non-current assets. So we are going to write non-current assets. Non-current assets, they come with three columns. The first column, the cost column, then we have the accumulated depreciation column. We also have the net book value column. So they come with 3 columns. Okay. So we look at our trial balance and try to identify non-current assets that we have. We only have equipment. The equipment, the cost of equipment was 6,000 and accumulated depreciation was 100, which means the net book value is 6,000 minus 100 to get 5,900. This is all for our non-current assets. This is what we have, 5,900. If we have like 5 items or 3 or more than 2 items, we would put these figures, then try to add. Then the total here on the net book value is what we go down with. Now let's try to move on and see how do we do it. Then we go to current assets. Let's try to identify current assets in our statements. What do we have as current assets in our statement? Okay, current assets, we have number 1, stocks. Stocks, we have 1,200. We also have cash, or the bank balance. We have money in the bank at 13,100. We also have debtors or receivables. We have this at 1,400. I mean 1,400. We have prepayments. Our prepayments, they are 3,300. So we find the total there. Our total becomes 19,000. We also have to list current liabilities that we have. Current liabilities. What do we have on current liabilities? We have payables. At 700. We also have an earned revenue. An earned revenue which is 1,200. We also have wages payable, wages owing. Our wages owing at 600. Now we have to add the total of our current liabilities and deduct those from current assets to obtain working capital. Okay, so the total will be 700 plus 1,200 plus 600. Then we get 2,500. 2,500. We deduct that from current assets and get our working capital, which will be 16,500. Now we add our working capital to the net book value of fixed assets. 5,900 plus 16,500, we get 22,400. And this will be our balancing figure. Now just wrap this one and try to create some space for us to do the finances part. Now these operations, they are financed by the net profit that we obtained the net profit was 2,900, but there were also drawings. Drawings were 500. Drawings reduced the value of our capital, so we deduct them. We also have our capital, which was 20,000. Now we have to add this and deduct what is deducted. 2,900 minus 500 plus 20,000. We get 22,400. Which is the balancing figure. 22,400, which is our balancing figure. Okay, so this is how we do the balance sheet and the statement of comprehensive income, or the profit and loss statement. Okay, let's meet again in the next lesson. Thank you so much.